It's been a wild week in the stock market, and hopefully you guys didn't sell out your portfolio. I found out how to do some pretty cool stuff on M1 Finance, and I just wanted to share that with you. So let's go take a look. Welcome back to the channel, guys. My name is Bruce Wang. Today I have another video from M1 Finance. I want to update you with my new portfolio. It is pretty much a brand new portfolio because I've changed up a lot of stuff. I found out that you can do some pretty cool stuff with M1 Finance, and I just wanted to share that with you. Every single week I'm investing $100 into my M1 Finance account. So by the end of this year, this account will be worth at minimum at least a few $1,000s if the stock market doesn't crash by then. So I just want to go over some of the new things that's been happening with this M1 account, just in case you guys have been wondering. And also, I do share my M1 Finance portfolio. I always leave a link in the description, so you guys can also, go check out the holdings I have, and you guys can check out, just how the overall performance is going on for these stocks that I'm holding. So the first change I made was I changed the name of the portfolio to the Wang Gang. I owe a lot of my success to you. So you guys keep me accountable. You guys keep me motivated. You guys keep me wanting to still invest in the stock markets. And I'm learning a lot from you guys as well through the comments and through our communication. So I want to dedicate this portfolio to you guys, named it for the Wang Gang. My portfolio right now is worth under $600. I'm down 2%, which is about $9. It's not a lot right now, so luckily I'm not too invested during the crash. And if you look here at my portfolio, you can see that it looks a lot different. Everything in my portfolio is another one of my pies that I've created. So let's take a look at the overall portfolio first, and then I'll go dive deeper into each and every single one. I've only been using M1 Finance for the last 2 months, and the more I use it and the more I get used to the platform, the better I like it. So as you can see, the portfolio has only been growing through my investments, but that's how it's gonna be in the beginning. There's not too much growth when it comes to this portfolio from any of the dividends reinvested, because my portfolio is just not worth that much. Down the line, when I'm in the thousands of dollars or tens of thousands of dollars, that's when this portfolio will start compounding. So the starting value on April 17th was only 200 net cash flow. I put in 400 since then. And the market gain has dropped in my portfolio down $9. And dividends earned since that time was 21 cents. Not too bad for such a small portfolio. And in my cash balance, I have 63 cents. There has been a lot of bad news going out there in the markets. And we ended this week on a pretty bad note with like Tesla going down like 5%. But let's move on to my new portfolio. So in the last few days, I pretty much created a brand new portfolio. So let's take a look here at each individual pie so I can kind of explain to you what I'm trying to do. So I have 1, 2, and 12, 13. So right now I have 13 individual pies for my entire portfolio. And if I click into each one, they will hold a different set of stocks. So in this communication pie, I have a lot of telecommunication companies such as AT&T and Verizon. Verizon is something that I've been looking into a lot, and I'm starting to like Verizon a lot more than AT&T. Over the last few months, over the last few years or so, Verizon has been doing a lot better than AT&T. So I want to shift this portfolio towards Verizon just because their growth and dividend growth has been doing pretty well over the past few years. But I'm also invested in like Shaw Communications, Comcast Corporation. Even though I hate Comcast, these guys own a monopoly on the American markets where the only way to get internet is through Comcast. The only way to get high-speed internet is through Comcast, and that's the only reason why I'm invested in them, is because I think that because they own a monopoly on that, they'll be doing pretty good for the next few years. CenturyLink, I'm also invested into. And right now the distribution is about 20% on each one. And for this communication sector, I'm pretty much all set. So I've divided my portfolio up into all different types of sectors. So if you guys didn't know already, the stock market, you can divide it up into many different sectors. The stock market, you can kind of divide them up into 11 different types of sectors, and these are it right here: utilities, real estate, healthcare, consumer discretionary, telecommunication services, materials, finance services, consumer staples, information technology, energy, and industrials. And that's what I did with my portfolio. I think this is a good way to get exposure into each and every sector and make sure that my portfolio is not too heavily weighted towards one sector or the other. So the main point of this strategy is to have exposure in each sector, and to have some diversity where if one sector goes down, it won't influence the other sector too much. So I try to divide them up as much as I can, and each and every single stock that I own will pay a dividend. I think this is a lot better than how my portfolio was set up just like 1 or 2 weeks ago, where I own like some companies that did not even pay dividends, such as like Netflix, Amazon, and one other one that I forgot. And on top of that, I have some brand new other strategies that I want to show you guys. So what I have here is the lazy 3-fund portfolio. I made a lot of videos about this. The 3-fund portfolio is just these 3 funds here, and this covers the whole entire stock market. And historically, for the past few decades, this has averaged a 7% return for anybody invested into these 3 funds. So that's not, when I say a 7% return, I'm not saying that it's gonna be steadily returning 7%. Some years it's gonna be lower, some years it's gonna be higher. So just to let you guys know that it's not gonna continuously go up 7% every single year. So I'm trying to stick with the basics here. This pie is within my portfolio, so I might have to change the names around so I can explain it better. I'll just name this pie right here. So this pie is in my portfolio, and such as a few other ones. So now I've explained to you guys that I have every sector in a different pie, and now I want to talk to you guys about the dogs of the Dow. This is another dividend investing strategy that a lot of dividend investors also do this. They have like a dedicated website that I learned a lot of the information from. So with the dogs of the Dow for 2019, this is giving me a dividend yield of 3.54%, which is a pretty healthy dividend yield. And I'm holding 10 holdings right now, and these 10 holdings, these are the 10 highest yielding dividend stocks from the Dow Jones Index. And 3M, Caterpillar, Chevron, these companies are well known. These guys are all blue chip stocks, and these guys all pay the highest dividends from the Dow Jones Index. And on average, this strategy has beaten the Dow Jones, historically beaten the Dow Jones many times. I'm not trying to say that it will beat the Dow Jones every single year, but on average, again, when you're investing in stocks, you're investing for the long run. So you're trying to play the averages here. On average, this has beaten the Dow Jones. So that's why I'm kind of trying to test out this strategy, and this pie is in my portfolio as well. And I have about 10 to 15 percentages into this pie. And I love the name, Dogs of the Dow. It's awesome. It is an awesome strategy. I'll leave a link in the description if you guys want to learn more about the Dogs of the Dow. Whenever I'm investing in the stock market, I'm always trying to beat the S&P 500. I'm always trying to beat the Dow Jones average. And Small Dogs of the Dow is a spinoff of Dogs of the Dow. And historically, this has beaten the previous pie that I showed you. 5 stocks here. These are also on the Dogs of the Dow, but they're smaller, hence the name. These are also known as like puppies of the Dow or something like that. Historically speaking, these guys, these Small Dogs of the Dow has beaten the Dogs of the Dow. They've outperformed them on average on many years as well. So I'm trying to test out this strategy as well. So this dividend yield is 3.59%. And I love the fact that this strategy might be a lot better than the last strategy. So I love, and with M1 Finance, you can just test out all these strategies all at the same time, which is amazing. I never knew that I could do this. So now not only is my portfolio like super diverse, I'm also testing out new dividend investing strategies that I've never even heard of before, like 1 or 2 years ago. So if you guys want to check anything out with this portfolio, my holdings right now, they went from 13 holdings to 57 different holdings. And the expense ratio is very low, is almost non-existent. Dividend yield for this entire portfolio is 4% dividend yield. And this doesn't include all the growth that I'll be having from the portfolio itself, from all the stocks going up in value and whatnot. To go even deeper, I want to show you the percentage I have in each and every single pie here. Dogs of the Dow, I have 15%. Real estate, I'm all about the real estate. I have a real estate update for you guys that I want to talk about in my next video. So for real estate, I have 15% in that. Small Dogs of the Dow, I have 15% in that. And the all-time great lazy 3-fund portfolio, or PI as you want to call it, is 10%. And all the different sectors, I kind of just averaged them out 5% each, 5% each. I don't want to go too in depth right now with each and every sector, but I'll kind of want to make a video on each and every single one, just to shed some light, and even for myself too. I need to learn more about each and every sector. I need to learn more about just everything in general, just to know what I want to be invested in and what I don't want to be invested in. So going into my holdings, I have, my biggest holding right now is ExxonMobil, Pfizer, Verizon. And I think because a lot of my portfolio overlaps with a lot of different companies, that's why these companies at the top are just so high. When it comes to this portfolio versus my Robinhood portfolio, I actually like this portfolio a lot better. And I even made a separate pie for my Robinhood portfolio here, and we can check it out here. So this is the exact holding that I have for my Robinhood account. I have 14 different stocks. Expense ratio is about 4%, and that's only because I have the SPHD, and dividend yield is 6.2%. So a lot riskier when it comes to this portfolio, and that's because I have like crazy stocks like AGNC and Prospect Capital. So right now my Robinhood portfolio is completely separate from my M1 Finance. I kind of want to test it out to see how these two different strategies will go, and I'll probably make another video later comparing the two performances. I think this M1 portfolio, like I said earlier, this portfolio will probably do a lot better because each stock here is a blue chip stock, and also it pays at least like a 3% dividend, which is a lot more sustainable and a lot less risky when it comes to the monthly paying stocks, and when it comes to stocks that have over like 10% dividend yield. So I know the risk. There's a lot of risk involved when trying out different strategies, so I'm not too invested at the moment. $600 is not too bad, but it is a great start. And I think that's why a lot of you watch my videos, is because you guys are also starting out as well. When I look back at my older videos, I didn't know anything about M1 Finance, and the more I use it, the more I like it. And I've been also testing out the M1 Finance on the desktop, which is actually a lot better than M1 Finance on the mobile app. And I will probably do a separate video with the M1 Finance on the laptop. There's a lot of research tools and a lot of resources that you can definitely use, and you'll definitely find very beneficial if you're using the laptop version. If you guys are still interested in Robinhood or M1 Finance videos, you guys can go check out my older videos here. You'll find it very helpful and very insightful, so just go check it out. I put a lot of time into making these videos, so just leave me a like if you like the video, and subscribe if you haven't already subscribed. I make about 3 videos every single week, so I love you 3000, and I'll catch you guys on the next one. Bye.